Hello everyone, and welcome to this session where David and I are going to be looking at what's been happening in on the markets and everything except Forex in this particular session. We're going to look at some stocks. I think we've got some commodities as well, but generally see how we can apply a volume price analysis to our trading, sometimes to our investing, as I said, by looking at those particular markets. But before we start, as usual, can I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading and investing can be a very risky business, so please don't ever think of using money that you cannot afford to lose. We haven't actually done a session at this time for, I can't remember the last time we did it, but we thought we'd just mix it up a bit, and it allows a lot of our US traders to kind of join us. It's not quite the end of the session, but it's you know, we're getting there, as it were, and it's not such you know, such a struggle, as it were. For those of us in the UK, it doesn't really matter. It's evening here, and I know we are joined sometimes by people in the Far East, and I think it's very early in the morning. But wherever you are in the world, you're very welcome, and thank you so much for taking your time out to come and spend it with us. That's it. I'm just going to take this down because I want to go pretty much straight on to the charts and some other things that I want to cover. In fact, let me start with what I was going to cover. Those of you who have come along regularly will know that one of the things we've been, I've been covering is how you select stocks to trade. Now in Forex, although we're not going to cover Forex, one of the ways we have got around that, well, first of all, in Forex you have a much smaller choice generally. For retail traders, it's the choice between 28 pairs. Choosing a trade, you know, finding a trade between 28 is fairly straightforward, and we've developed some particular tools to help our traders. Those are available from Quantum Trading. And when it comes to stocks, it is, you know, it's, my goodness, it's totally overwhelming because there are thousands of them, and that's just in the US market. And of course, you've got the UK market, and you've got local markets as well. And clearly, one of the things, if you are going to be thinking about stock trading, forget how you're going to stock trade, whether you're actually going to buy and sell the stocks themselves, or are you going to be doing some kind of options with them, or you're going to do some kind of fractional trading. That all depends on really the amount of money that you have to start. What is your starting capital? But we're going to be covering that in future sessions, but this is, and as I said, if you've been coming along, you'll know we've highlighted quite a number of sort of free sites where you can go and sort of start with this research. And the one site that I think probably stands out above all the others for looking at you know, a selection, looking at a filtering, if you like, and this is Finviz. Now, thus far, all we have done is we have I've done a very simple, very straightforward search criteria, and as I said, those of you who've come along will have seen this before, but I just want to take it a little bit further because there are other elements that you can add to your filter that also integrates quite nicely with the volume price analysis methodology. The volume price analysis methodology is obviously price action, volume, candles, candle patterns, support and resistance, and also looking at markets in multiple time frames. So what we've done is when you look at the is where you start here. This is the one. This is the screener page that you start with. you can see what the search selection is. I mean, I've kept the exchange as any, but if I actually if I keep that as that, now this is quite an interesting. This is market cap. Well, I've left it as any, which means it will throw up, you know, mega companies worth 200 billion or more, the Teslas, the Facebooks, the Apples, etc., etc. And you can go right down, and you know, but you can select all the way down to the micros, and in the middle you've got the small caps, the mid caps. And the reason I want to mention that is it also, knowing where a stock sits in how valuable it is, also has an impact on its liquidity. I'm not talking about the volume of shares that are traded on a daily basis, it's liquidity. At the moment, markets are, you know, they're ticking along. They are, the indices are at all-time highs again. The volume has reduced, and when we look at the charts, we will see that, you know, it may look rosy on the outside, but at this particular time of year, there's an awful lot of window dressing that goes on to coming up to the back end of the year. Funds have got to, you know, present reports and what have you. And the market, in terms of seasonality, it likes to stay positive. You've all heard of the Santa's rally. So between now and Christmas, markets, you know, they push up, whether it's valid or not, because it's the end of year. Now, that didn't happen in 2018. It was like the nightmare before Christmas, and that was when there's one Fed meeting in December, just before the end of the year, and they really absolutely upset the apple cart back in 2018. But generally speaking, between now and Christmas, markets tend to be very positive. I mean, earnings, we're also in earnings seasons. Earnings are coming in, you know, very strongly, generally speaking. But you'll also find, when you look at individual charts, you would think good earnings, great for the stock price is going to go up, and it doesn't. The opposite seems to happen. And one of the reasons that happens is because markets, they look forward. They say, yeah, you've had a great, you know, you've had a great quarter, you know, you've reported these stonking earnings, but can you do it again next time? And there are a lot of headwinds up ahead. One of them obviously being inflation. You know, the virus still hasn't gone away. There's problem with there's all, you know, there's the energy crisis as well. Inflation is probably the one that the market is most exercised with at the moment. Although what type of inflation we're going to get maybe next year, maybe there's a bit of a debate about. So that's why you can have fantastic reporting on earnings, but the stock doesn't always go up. But if it's a stock that is possibly going to benefit from an inflationary environment, then the opposite can happen. So there's all sorts of you know, there's all sorts of reasons why that happens. So I'm going to leave that for the time being on any market cap. But what happens is, if you were to change that to 10 billion to 200 billion, you see immediately you will get you know, a smaller selection, as it were. So let's just leave it at that. The average volume, I've gone for over 1 million. The relative volume is the ratio between the current and the 3-month average intraday, which basically means it's higher than it's so it's 1.5 times more, and that's what you want. You want a lot of volume, because by having a lot of volume, it tells you two things. If if the price action and the volume are in agreement and not anomalous, what it tells you is that what you're seeing on the chart is genuine. But if you're seeing, you know, a good volume, but the candles don't reflect that, that is an anomaly. So I like to go it over on 1.5. And if you're going to be trading on a daily basis or a very short-term basis, you want lots of activity. If you take volume as activity, that's why that's it. And you can adjust that. So if you want to go over 2, you will find that will immediately cut it down as well, and you could go even over 3. You may even, you know, that you are really sort of restricting yourself. But as I said, it's a great aside for practicing all this stuff. See what happens when you put these different filters on and what it throws up. The sectors I've left as any. We've talked about sectors before. I'm going to do not sectors today, but I'm going to talk about sectors certainly in the forthcoming sessions, because we're at the end of the year and we need to know which have been the worst performing, the best performing, because that gives us an idea of what may happen next year. And then what I've got over here is they have to be optionable and shortable, not necessarily because you're going to do that, but it just means that, again, it's this activity. And these are also stocks where there is going to be, as I said, liquidity. At the moment, liquidity is fine. You know, there's lots of buyers out there, you know, maybe even sellers. But if markets become very tricky, if you're in a stock that the liquidity is not very good, you know, trying to offload something can cause a problem. Now, so that's kind of the descriptive. But you can also filter on the fundamentals. And the reason I looked at FinViz a little bit more closely is because I had an email from someone. I'm not sure if they're with us today, but he wrote to me, and very nice email. So, you know, really appreciated these sessions, and particularly with you know, highlighting, introducing the FinViz website. And he knew a little bit more about the fundamentals, and he'd actually put a little set of stocks together on the you know, based on the parameters of, as I said, on what we call the descriptive side. And then he added the fundamentals. Now, we don't cover the fundamentals in these sessions, not because we don't want to, but because we're talking more about trading. And the fundamentals, the fundamental metrics for stocks are really, I would say, much more for from an investing perspective, but it's something that we will certainly cover in a program that David and I are kind of already talking about, sort of putting together. And you know, we will go into a very great detail on the fundamental metrics. But he has actually added in one or two. I don't know what they are, but he's added them because, you know, I think he wants to buy and wants to stay in for a little. He's not quite an investor, but not a trader. He's kind of in this in between. And the difference between a trader and investor is essentially the amount of time that you are likely to be holding on to something. And if you're a trader, you certainly have to pay attention to the fundamentals in terms of the earnings, and you know what's likely to affect the price action on a daily basis, as is going on at the moment because we're in earnings season. But you really wouldn't pay a lot of attention to, say, earnings per share, or the return on assets, or the return on investment, and what have you. And the nice thing about this screener is it's a great learning resource. You just highlight it and it explains it to you, so you don't have to go off and search. But there's also a third element to this, which I must confess, hand on heart, I haven't really paid an awful lot of attention to it, other than I stuck the beta on, and the beta is a measure of the stock's price volatility. Volatility is something you really have to get to grips with and understand if you are going to take your stock trading, investing onto, you know, go into the options side of things. And again, this is something that we will be covering in a little bit in these sessions, but it's something that is going to be a huge part of the stock program that we want to put together. And the reason for that is, when David and I started in options many years ago, we had a very simple a strategy in as much that we used to do something called a buy write. We would buy stocks and we would immediately write a covered call, which paid us a premium. And for a covered call, you really have to, the chart has to be set up in a particular way, and you really have to understand volatility. And we did it for income, so we had the stock, and we kind of earned a rent on the stock. This is how it was described to us, and I think it's the best description. It's like you have a house and you rent it out, and with the stock we had, in Honeywell, I can't remember, Duke Energy, that was the one we had, and back in the day it was it Hilton, David? Hilton Hotels, Hill Hotels, and we just kept, and was it Owens, Illinois? I mean, they were just some of the stocks we held, and we just every month the premium would come in, and the stock was never called. The stock was, I think we were only called away once on one of our stock, but it didn't really matter because we got more than we paid for it, and it was a very, very nice way of owning the stock, but also earning not just the dividends but the premium from the covered call. And one of the things you want to know about a stock is how volatile it is. And we didn't want a particularly volatile stock with a covered call. We wanted it kind of mildly bullish, so that it would tempt people to think that it was going to go up, but actually it was going to be sort of range bound. So beta was very important, and we wanted it to have some beta, but not too much. But beta, in terms of day trading, is really important. You have to see, because the higher the number, then the more volatile it is. But it's like everything else with volatility. It's a bit like Goldilocks. You don't want too much, and you don't want too little. So that's what I've done here. But looking across here, what you can actually look at as well, and I haven't been through all of them, but the RSI, we use the concept of the RSI a lot in the Forex market, because it is a market of mean reversion. Things get oversold, things get overbought, and they go back, and we look at a reversal tactic. And the Forex market is very much buy and sell, buy and sell. You don't really, because it has these oscillations, these sine waves, and we use the concept of the RSI very, very much so. And we've actually developed indicators that incorporate this concept. In stocks, it's, yes, you can by all means apply it. This is something we're looking at for as part of our own quantum indicators, but not coming up with the sort of standard RSI. We're looking at sort of tweaking it slightly so that it's more, how can I put it? It's a little bit more sophisticated than the ones that appear on most platforms. However, the concept itself is quite interesting, because rightly or wrongly, if you are the sort of trader that only that has a preference, I wouldn't say a bias, a preference, because a bias means that you're not necessarily aware of it. A preference, say on the buy side, it can be very useful to see when something is oversold. So, and it saves an awful lot of time looking at charts. So if you know a particular chart, from your filter, that the chart is approaching an oversold state, as I've put up here, which is 40, and in fact I could go all the way to 10, but I don't think I've got anything at 10. Nothing is that oversold at the moment. So let's see at 20. No, I couldn't get anything at 20, so I stuck to 40. And at 40, I actually got quite a few charts, and this is quite a nice this Brazil, forget that one, right? The Boeing, yep, that one. It just tells you that it is, has been selling off. Therefore, is it at a point where possibly it is going to reverse? So this is actually quite a nice chart that we have here. As you can see, it's $7.34. It's oversold. If you look at the candle, not today's candle, yesterday's candle is a down candle, but there's a wick to the bottom of that candle with a lot of volume underneath it. So possibly this is looking to maybe move higher. It's in oil and gas. It's in the oil and gas sector, which has done phenomenally well this year, but has sort of come off slightly. If I just flick that open quickly, you can see here, in fact, we talked about the oil and gas sectors back in September, wasn't it, David, or late August, September? And this is where it is. So this has had a really nice run up. You've got a sort of a hammer candle down here, a really nice trend, not volatile, fairly steady, just up, and then it goes into this consolidation and then bang. Now there may be a very good reason why it's suddenly sold off, and I suspect that's also a volatility candle. So we had the price action into the spread of the candle and then another thump lower. But look at what's happened. It is oversold because of the price action that we have at the moment, but there's been a big wick to the bottom of that candle. So, but you wouldn't have had that chart come up if you hadn't put the RSI up there. And if you have a preference to the sell side, then obviously then you look at the overbought. So let's have a look and see what comes up. Yeah, and we've got Tesla. I'm going to talk about Tesla because I did a post on Tesla, and Tesla got so much abuse on. I get abuse on. I put my head above the parapet on certain things. Gold being one, Tesla being another, and Tesla. God love him. I have so much admiration for Elon Musk, but I can only, David and I can only call it as we see it. And, what we said was that it's, the volume is falling as the price is rising, even on the monthly chart. And I think we said it before the shooting star. I think it was that it had a gap up. Because it was earnings, and then this shocking great shooting star has come up, and today it's actually gone into the spread. So it's it's now there's lots of reasons other than the sort of VPO, and David will go through the chart in a little bit long. Yeah, David's got it all up there. The thing about Tesla is this: and it's also a great example of what I wanted to say about the options market. And from when we first started, the retail participation in options and the ability to trade stocks using options with an option app, things like Robinhood, Webull, those free commission-free trading, as it were, by using the options mechanism. And you have groups on Reddit and Wall Street Bets, etc., who kind of are a collective, who trade as a collective as well, which is fine, which is great, has actually kind of skewed the options market in as much that you have tremendous number of traders all buying calls. If you buy a call, you think the price is going to go up, and so the sheer pressure, the options market. And what happens is that there are now dealers who sit, they're not at the exchange, but they kind of absorb all these calls. They make sure that the market functions, and it kind of skews all that what they call the Greeks. Again, this is something I don't want to go into in a great deal of detail, but it's what we're going to cover in the program, because it's really important to understand. And what it means is, now tomorrow is and these are weekly calls, which were never around when we were around. It was monthly, wasn't it? That was the shortest time frame that you could use. Yes. But weekly calls, they all expire on a Friday, have caused, as I said, there is not a skew. I mean, it's brought masses of people into the market, but it's changed the nature of the market. Now, what happens with Tesla, if I give you an example, yesterday there was 16 billion of call options just on Tesla. And it was 55% of the entire options market. So you can see, you can understand why the sheer volume of call will also help to drive the price up. It's not necessary, it won't be reflected in the volume, but it will does impact the actual price action. But I'm not going to talk about Tesla anymore. I'll leave David to explain that. So we'll see tomorrow whether the VPA signals that David and I saw in the last couple of days on, well, longer than a couple of days on Tesla, in which, you know, we put our head above the parapet and properly got it, got rotten tomatoes thrown at us. We're going to see what happens when all these, you know, when what happens tomorrow at expiration. So as I said, Tesla is a really interesting, and Tesla's not the only one. There are these meme stocks, but Tesla is listen. There are fund managers out there. There's one particular fund manager who lives not far from where we are. I won't mention his name because you know, he writes about this, and he, you know, he bailed out of Tesla, and I think when it was $100, he thought this isn't going anywhere. The company's not making any money. The fundamentals, you know, are just ridiculous, and he's just Musk has just ploughed on and on and on, and you know, good luck to him, as it were. So, and in a way, Tesla has been a growth stock where the fundamentals have caught up, as it were. So the valuations for it. But if you looked at it when it was $70, $100, $200 a share, you wouldn't, you know, as a fund manager, you wouldn't touch it with a barge pole. But then you also have to remember with fund managers is they have some very strict criteria for what they can and cannot buy. So as I said, it's quite an you know, it's not amusing, it's just interesting, and it's something that we will certainly incorporate in the program, because as I said, the market has changed and it is changing rapidly. The participation, how we, you know, how we look at stocks and equities. I mean, there's talk that the exchange is going to be open a bit longer, I think, as of maybe next year or what have you. But I actually think there's, because I've read this, that there are people who are pushing for stock trading to be done on a 24-hour basis. You know, why should it close? Why can't it be like, and at the weekends, why can't it be like Bitcoin? It just trade, you know, it is non-stop trading. Now, the other thing it has here as well is the patterns. Now, I've decided I'm actually going to pay for the elite service, because I just get a lot more than the free. But for when you start, the free is fine. And you know, because support and resistance is such a huge part of VPA, and we tend to use just horizontal S&R using volume and price based. If you click on that, and you will see that, and you know, again, you will get a different set of charts, as it were. And what it also has is, and the reason I want the custom elite is because you've also got individual candles. And if you are, for example, someone who's looking for potentially a stock because you have a preference to the long side, well, of course, you know, the candle that says that is the, you know, the premier candle for a potential you know, reversal higher is the hammer candle. And we talked about a pattern being saucer patterns. Well, you know, buying always comes in at the bottom at, you know, when you have lots and lots of wicks. And if you've got lots and, you know, if you've got wicks, you know, it is one signal. It doesn't mean there's going to be an immediate reversal, but it's an initial indication that something is going to happen. So I hope you will spend a little bit more time on FinViz, playing around with the different filters and what have you. And one other thing I was going to say on the candlesticks are these two candles, the Marubozu. And the reason these candles are quite interesting, in fact, I haven't got a black one, but I did have on Viac, and we'll have a look at Viac, is because this candle, whether it's if it's black, it's a down candle, is it's a very widespread candle. It doesn't have any wicks to the top or the bottom. It might have a little tiny one to the top and the bottom, and it's a brilliant candle to use for benchmarking and also to see whether, in fact, the price action and the volume, is it anomalous? And the one that came up, it hasn't come up this time because, well, it just hasn't, because it's the filters, the stock sort of refresh. I don't know how often they do refresh, but they do. And we'll talk about Vertex Energy in a minute, because this actually came up as a hammer candle. Let me just have a look at VIAC. Yeah, this is where. Now this actually came up as this was the candle. It's dropped out because it's actually developed a wick to the bottom of the candle. And what it was, if this was a Marubozu, you wouldn't have this wick. It's just a solid candle. If I can give you, say, an example, that would be one. That would be a solid candle. That would be a solid candle. There's a tiny wick underneath there, but nothing, nothing to write home about. And what it is, when you look at the volume underneath it, this is a down candle, and you look at that volume, you have to try and benchmark it against one that say of a similar size, or you look at the volume and you think, well, hold on a minute, the range of that candle is this, but it's only got a tiny amount of volume. That would be seen as an anomaly, and you would say, okay, is this going to go any further? The chances are no. And in fact, this hasn't turned into a Marubozu because we've actually got some buying has come into VIAC. VIAC is an interesting one because, and is certainly one that to look forward maybe to put on, and I'm going to keep an eye on this one because there are so many good VPA lessons. Is if we look at it, this is the monthly chart. It has gone from $10 in 2020. It shot up to 106. We can see here these two sort of, I don't know what the filters would have said at the time, but all I know, it crept up to the volume point of control. And earlier this year, it shot up. We've got volatility, and then we have the mother and father of all sort of I wouldn't say it's not really a shooting star, but I mean with weakness, and then it's gone back right down to $36. Now this is the monthly chart. Could this actually go back down to 10? Well, to be honest, anything is possible. I think with Viacom, I think there was some kind of family dispute on it. I'm not sure. You'd have to go and do the research on it. But looking at the price action and looking at what's actually been happening, here we are. This is on the weekly chart. There we are. Let's have a look. There we are. And there is weakness here, despite what we see on the daily. Is we've had, as I said, it's almost like a pump and dump. There's a massive ramping up of the price action, and you look at the volume underneath it. I know it's all distorted by this here, but this is what I'm saying about the range of the candles with the volume underneath it, until you end up with this sort of massive doji. Now, doji isn't always a reversal, but it's volatility, not a huge amount of volume under that, and certainly not a lot of volume under that one, which is actually less volume under this candle than there is in this candle. And then suddenly, bang, down it goes, and it went all the way back down to $40, and it just been going nowhere around around the volume point of control, trying to rise, and just sort of drifting lower. And this is where your levels come in, because levels are also terribly important. You do the volume and price action analysis, but then where is that occurring? Is it at a significant level? And certainly the volume point of control is hugely important. Is it it will act at the moment. It's below that, so that will give further bearish pressure on this particular chart. And I don't have the Camarilla levels on here. If I did, they would tell me where this price action is likely to go. Well, based on volume, the obvious point is here, and it's about 35. It's about 35. But on the day, as I said, we've had some buying coming in because it's actually stopped on the volume support on the daily chart. You also have to remember the levels on all charts, especially around zeros and fives. There will be traders, investors who think, you know what, it's fallen down to this point. I think it's a good place maybe to put some buys in. You are also constantly trying to analyze what the psychology of the market is, and also your traders against whom you are trading. And people have all sorts of views about, well, they think, oh, that's very cheap now. It's gone down because it's gone down from 140. Oh, it's only $30. Oh, that's a bit of a bargain. Not necessarily seeing on the slower time frames, actually the selling hasn't finished, and you really do have to be a little bit patient. But the FinViz screener, together with understanding the 5 elements of volume price analysis, will tell you whether in fact it is time possibly to take a reverse, because this would be a reversal trade, because the price has fallen and it is now potentially going to go higher. And you also have to remember that prices fall an awful lot quicker than they rise. This morning I was messing around with my MT4 platform, and there have been some fantastic moves in forex this morning. Needless to say, they always pairs always rush away lower, and you think, oh great, there's a nice little reversal come in, and it does come in, but oh boy, I think my preference is like David to the short side, because I want to get in and I want to get out, and but hey, that's just me. Right, Vertex is another one that I actually picked up, and I'm also going to keep an eye on it. AMD was another one, but Vertex was, and this is an interesting one because this is Vertex Energy, because we can see here that, and this is market beat. The energy sector has been very, very profitable. We can see here the 1-year performance is plus 1,000%. This is partly in response to rising oil prices. Whenever there's talk about inflation, there's one sector that does do well, and that is the commodities do, but the energy sector do well, because there are certain things in our lives that we cannot, even if price goes up, we might cut back. Food is one, clearly, and energy is another. We have to stay warm. If we've got to go to work in our car, so the energy and the energy stocks and the oil price, they will be a beneficiary. So that's it. But as you can see here, the 5 days, the 1 month, the 3 month, it hasn't been so fantastic. But the reason I liked this particular stock is because of the anomaly, the sheer amount of volume that came in at the bottom here. Now, with market beat as well, what you can get is a great roundup of what the latest news is, and it just gives you not the fundamentals, but just saying what's who's interested in it, the fact that it's is it one of these meme stocks? Are people going to, I think it's very, very heavily shorted as well. Where is it? Oh, we've got insiders, a lot of selling. Is it going to be if the people who run the company aren't they're bailing out, then you think, well, what do they know? The short interest increases by 24.4. That's a lot. That is a lot. This is the beginning of the month. So, for whatever reason, the market has suddenly decided that this stock is one that is ripe for selling. But what I have here, let me just put that back to a vertex, because if we look at the chart, BTNO. Now let's have a look at the daily chart. And I think also, if my memory serves me right, let's have a look. Let's go back to the months on this one. Yes, this was another classic pump and dump that I call. You can see here on this was on the monthly actually, the amount of time this stock did nothing, absolutely nothing. It was stuck in this channel between the resistance and the support. Now this particular indicator on here for NinjaTrader, which is also available for TradingView in this particular format, what happens is every time price touches a particular level, and obviously you have a line that is displayed, painted on the chart. But the more times it's touched, the stronger it becomes. And what eventually happens when a stock is in massive consolidation, as this is, you get this channel. So this channel, it channels. And this is the monthly chart, but this happens on all time frames. Eventually, it'll break in one direction or the other. Now, it looked as though it was going to break to the downside, because it did actually go below this blue support. But again, because we use volume support as well as price-based support, the price actually held. And the volume is you can't see it here because it's all distorted by the amount of that came under this candle. In fact, it started to come under this one. You can see here, it actually fell back. It went back into, it kind of retreated back into the channel. These three candles are quite interesting because there's weakness there. Then you've got like a little spinning top there, but look at the volume underneath it. So it's still stuck in the channel, and then you get this huge sugar rush that goes into this stock. Massive candle volatility indicator triggered because of the little purple arrows top and bottom. So we know we're going to get a retrace into the spread of that candle, which we did. Masses of volume underneath it. Okay, you might have missed that one. The next one came, and it's when the volume is out of kilter with what you see on the chart. Yes, you've got a big deep wick to the bottom of that candle, but look at the volume underneath it. If it took that much volume to shift it that far, you're going to have to see at least as much again. You don't. And this time we have had a reversal. To me, this is a classic pump and dump. And this is not a penny, well, it's a dollar stock, I suppose, a penny stock. And at the moment, it's a question of, is it time, for it to come back again? Well, certainly on the daily chart, yesterday, there was a lot of volume under this candle here. We've got a wick to the bottom of that candle. It's also triggered the volatility candle. It's gone back into the spread of that candle, and it looks like the volume is going on it. And if it's certainly, and because it's heavily shorted, and if it's taken on, as I said, by the activist traders who want to give the hedge funds a bit of a bloody nose, then certainly they would. And at $4.72, I'm sure they would just pile into it. But it'd be interesting to see how this stock sort of plays out in the coming weeks. So I'm going to keep an eye. Certainly, we're looking at Tesla. We'll see what happens tomorrow. We'll see what happens to Vertex, and we'll see what VIAC happens the next time we have another one of these sessions. So if you've got any questions on anything I've said, please just drop them into the chat box. I'm going to pass over to David. David, can I pass over to you? Is that okay? Yep, I'll pass over to David, and that's it. I'm not sure I'm going to hear a contribution from me again, but if you don't, it's been lovely to catch up with you. And as I said, I'll catch you next time.
Hi everybody, very warm welcome. Hopefully you can hear me. Hopefully you can see my screen. I'm just turning around. Yep, I can see it on Anna's. So hopefully you can see it as well. I'm just going to move the chat box out of the way there. Brilliant. Let's start with Dear Tesla, which I have up here in 4 time frames, very different actually. I've got 1 minute at the top left, I've got 3 minute top right. Bottom left, I've got 5 minutes, and this is the daily down at the bottom here, which you've actually seen on FinViz briefly, but let me just highlight it for a moment. It's a really nice move going on at the moment, falling away. It's what I expected to see. I'll talk you through the chart. But this is basically, let me just pull it open a little bit more if I can. There we go. This is Tesla, and when you look at it from a volume perspective, we had a gap up, we had a volatility trigger, widespread candle, but a ton of volume coming in. Then we had this candle here, volatility trigger, ton of volume coming in. Now, and we've had a similar sort of spread of price action today. You probably can't see it, but there's actually quite a decent wick to the upside there. And this is the body now forming at 1035. This is a huge amount of volume going in here. Just move that up a little bit. I mean, we're up to 60 million here. So there's a massive amount of volume going in here. But what's more interesting, that's on the daily. But if you actually move this over to let's have a look at the monthly. Very slow time trail, I agree. But if you look at the context of the volume here against the monthly price action, I mean, to say that that is an anomaly is, I would suggest, understatement of the year. Even someone who is not particularly familiar with volume and price would look at that and say, well, and bear in mind, we're 27th of October, so yeah, we've got a few days to run yet, but you know, where's the volume going to finish up? I don't know, maybe 600 million, maybe something like that. But if you look at it in the context of just from a very common sense perspective, to move, you know, $300, $350 on a stock price, and to do it on this sort of volume, you know, is this in agreement or is this in disagreement? And that's basically, it really sums up the whole premise of what volume price analysis methodology is about. It is looking for very simple, when you start very simple anomalies in this way, where you've either got very low volume, as you have here with an extreme price move, or where you have the opposite, which is very high volume, and you have a very limited move. And they are anomalous. And I mean, there are many other aspects to volume price analysis, but this is just such a clear example that it's hard to read it in any other way. For this price to move that far, you would expect to see, I mean, you only have to compare it with the volume here. Okay, this was a down candle. We saw some strong buying coming in there, no problem at all. That's what you expect to see. You know, we had a $200, $250 move here. You know, you expect to see that sort of volume associated. And in exactly the same way as you've got this anomaly here with this candle, we had this anomaly here with this candle too. Look at the volume associated with it, it's pretty low. We've had this sharp rally higher. Now, it's not to say that the price is going to collapse, but certainly from an investment or a trading perspective, what you're looking for is at the very least some sort of congestion to follow, if not a full-blown reversal. And, you know, that's what we got flame for. So, hey ho, you know, our shoulders are broad. Let's go back to the daily, and I'll pop that back full size. So that's what we're looking at right now. You know, it's falling quite nicely. As an intraday trader, this is a really nice move that's developing. Pull it up on 3 minute. The trend monitor, as you saw there very briefly, is a red. This is on 1 minute, remember, so we're falling away on red. We're negative here, we're negative on 3, we're negative on 5, been pretty negative on 5 right the way throughout. But this is a nice move. And this is just confirming, the volume here is confirming the nature of the move. In other words, the downside, there's 2 aspects to it. You've got widening spreads, which is one aspect, which is what you're always looking for in the down move. In the same way, in an up move, you're looking for the same sort of thing. You're looking for widening spreads all the time. So you've got widening spreads, but you've got a rising volume. And that is confirming the bearish nature of this little move at the moment. Now, I say this is a little move. We've gone from where 1040 to, where are we, 1032? It's $8, you know, which for a stock move is a decent move. traders will be making money hand over fist. Now, the other aspect, obviously, as Anna mentioned, in terms of volume price analysis, is not just the analysis of volume and price, but it's also to do with levels. And that's where, there are two aspects to analyzing levels and reading levels as the price action develops. The first is with the accumulation distribution indicator, which is this one, with all these various widths of line on the chart. And the beauty of the indicator is that it paints a picture of strength and resistance from a price-based perspective. You don't even need, you can glance at the chart and instantly you can see these strong levels. This was a very strong level. The price came up, hit it, it's acting as resistance. It's sitting on top of the price action here. It's acting as a buffer, as a barrier to the price moving higher. These other levels here are less important. This was tested once, that was tested 6 times, this was tested twice, that was tested once, this is 3 times, etc., etc. What's also important though is when they act as clusters. When you get little clusters like this, you had here, in themselves, they are relatively unimportant when compared to these very strong levels that you get of much thicker levels. When they cluster together in this way, then of course they become much stronger. So you've got 2 levels here, which in themselves are relatively minor. But if you add them together, it doesn't double. You don't say, well, I've got two levels of 3 here, so it's equivalent to a 6. It's not a game of conkers, but nevertheless, they will increase the strength of those levels of support and resistance and act accordingly. So price-based support and resistance is extremely important in terms of volume price methodology. Got a little bit of buying coming in here. You can see it here. Just to change tack, what I've got down the bottom here is the tick speedometer. Now, normally the tick speedometer over here is used to configure your tick charts. If you're trading on tick charts, trading stocks intraday, then you need to know what tick chart setting to set those to. Otherwise, you're just trading blind. And that's what the tick speedometer does. It's one of its functions. It actually delivers the optimal tick setting to set your tick charts to, because otherwise it's just guesswork. But what it also does, as you can see at the bottom here, it has this traffic light system. And the reason it's attached to this time frame chart is because what it's telling me is where we go into red, we're moving into periods of low activity. And ideally for trading on an intraday basis, what we want to see is the orange and the green. We want to see these punctuated regions here of orange and green, because it means we're seeing increased activity. We've got increased activity here. We've got buying coming in. We've got this wick to this lower candle here. Let's pull that out, make it a little bit bigger if I can. Got a wick to the lower body, got good volume coming in there. So I've peeled away the volume over on the right-hand side. So it's a bit more demonstrable. There we go. It makes it even more demonstrable still. Okay, I'll come back to it. So what we're seeing is we're seeing buying coming in here. So what we're looking for is a little bounce here. Now, bear in mind what we're looking at thereafter is several things we're looking at, and to lead on to what I was going to say next was we've looked at these levels which are based on price-based support and resistance. The other levels you look at are those based on volume, because this volume histogram, which is associated with the VPOC, which is this level here, this yellow dashed line is when price is in agreement. In other words, there's no bias between bullish and bearish price sentiment. The two factions, if you like, the bulls and the bears, it's like a tug of war, to put it in a simple analogy, where the two teams are equally weighted and the little white flag that sits in the middle of a tug of war stays in the same place. It doesn't move. As soon as one of those teams or bullish or bearish sentiment takes hold, then the market moves away from the volume point of control and starts to move towards these areas of on the histogram. Now, the importance of the areas on the histogram is that when you come down to areas such as this, where you've got what we call a low volume node, volume acts in the same way as does price from a support and resistance perspective. So when price approaches these areas of low volume, you expect the price to move through there fairly quickly, because just as in the way as price will act as a support mechanism, so volume will act as a support mechanism in this case, because it's very lightweight. When you've got price moving around the VPOT where you've got the heaviest concentration, or where you've got the price trying to break through, if, for example, should Tesla start to roar higher, first of all, it's got to break through the volume point of control itself, where you've got this ton of volume waiting. You'll have old orders there, you'll have new orders sitting there, all sorts of congestion there. So when the price gets to these areas of high volume, you expect it to congest. So it's using volume in exactly the same way as you do with price-based support and resistance. And that's the other factor, if you will, of the volume point of control and how to use it. You can see that little bounce taking place. And the other aspect to price is also, in this example here, you've got two candles. Now, when you overlay this candle on top of that one, what you've got is a hammer candle. And that's why these are so important. Now, it's very easy to do that with two candles. It's very difficult to do it with more than that. Just as I'm speaking, you can see we've got a very strong level. This is on the 1 minute chart. We've got a very strong level on the accumulation distribution indicator here of price-based resistance coming into play at 1038. So if the market is going to test that, fine, it's an area to be aware of. More importantly, if this is going to recover, it's got to break through all this volume that sits around this region. It's got to get through this level. It's got to get through this price level, and then get out the other side and up into this low volume area. And we've got relatively lightweight price-based resistance sitting above. So for this price to get through onto the next level, if you're bullish at the moment, there are several factors, certainly from a 1 minute perspective. And bear in mind that when you're looking at timeframes in multiple charts, a slower time frame will always carry more weight than a faster time frame. So if you've got something that's coming up to a significant level in a 5 minute chart and you're on the 1 minute chart, it will carry far greater weight, be far more significant than what is happening on your 1 minute chart. So you've always got to bear that in mind as well. This is coming up to test this. So for this to break through here, we've got to get through here. We need to see decent volume. We've got some weakness coming in. The volume's falling away on that last candle. Tried to rally. Let's see if it tests it, if it's able to get through there. Let's see what happens. Just wait a couple of minutes to see what happens on this particular chart, because it's at an interesting juncture. We've got this to get through, and then once we're through that, then we're going to push up through here. And what we expect to see around the 1040 area is congestion building, because in exactly the same way as when it came down to this level, it congested, we would expect to see the same thing, because we've got all this volume sitting here. So we expect to see congestion if it does indeed break through this level. Just keep an eye on that for a moment. Trend monitor, you can see, is just starting to transition back into bullish mode. We've had the 2-bar reversal. And what I was saying about this 2-bar reversal is, yes, it's very easy to overlay one on another on a 1 minute chart, or indeed any time frame chart, but if trying to overlay 3 or 4 candles together and get a reading on it is much more difficult, which is why we use multiple time frames. It's another aspect of using multiple time frames. Just see if this does actually hold or does break through. So I'm gonna have another run at it. Just hold it there for a moment. And when you're scanning your eye across here, you pick up all the other nuances of VPA. Look at the volume here under these two candles up at the top here. We had a nice candle there, that looked fine. Then we get weakness, we get a pivot high up here. So we've got this 3 candle range with a pivot on top. Down we come. And what have we got in the price waterfall? We've got a classic rising volume. That's what you want to see in a price waterfall. If you're trading short, this is what you want to see. Ideally, you want to see widening spreads, but you definitely want to see rising volume exactly in the way it's shown here. I couldn't have drawn it better myself. It's just a classic example of a price waterfall. That's what you're looking for. And as Anna said, I have a strong bias to the short side for that simple reason that markets, I have a preference. And that's, it's something I'm aware of. Just have to be aware. And of course, just coming over to this region, this has been tested. Every time it's tested and holds, it gets stronger. It's like Popeye and his spinach. If you've seen the cartoons, he eats the spinach, his muscles grow stronger. It's exactly the same principle here. Is it going to break through? Well, you've certainly got wicks to the lower body here. You've got 2 wicks here, and you've got some decent support under that last one. It's just requiring the effort of a decent candle breakthrough there. But it just shows the power of the indicator, and it does all this for you. So it's constantly building this picture. It's rebuilding the whole time. Every time a level is tested within the price action, it will rebuild and redraw that level each time you refresh the screen. And then, of course, you're looking at other charts, you're looking at the other time frames, what's going on the 3 minutes. Drop down onto the 3 minute for a moment. Let's just have a look at that. Okay, we saw the buying coming in here. We had the pivot underneath. We've got a classic pivot arrangement here. What have we got here in terms of support and resistance issues? We've got a hugely strong area here, this very wide dashed line that's been tested 7 times. So that was acting as support at this point. Now it's acting as resistance, of course. We've got a relatively minor level here at 3. We've got some more building here, which are being tested right now. But also what's of interest, we've got a rally here, but we've got a rally under falling volume. What is that telling us? And more importantly, the spreads are narrowing. And I'll show you that also on the indices. And it's one of the factors, certainly on the daily timeframes, where you're looking at it and thinking, do you know what, this is starting to look weak. It's what we call catenary price action, where you see this curving effect. So you'll see a market do this. The spreads are nice at the bottom, and then gradually as it gets higher and higher, the spreads flatten off because the market is struggling, it's weakening, and over it goes. So you get this arching effect all the time in terms of price action. Okay, it's pretty stable there at the moment. It's not doing a lot, kind of banging into all those levels. Then you're down onto the 5 minute. What are you looking at in terms of 5 minute? Exactly the same principles. You've got the VPOC here in the way. So, you know, whatever happens now, where are we? 8 o'clock our time, so another hour to run. Whatever happens, if the market does, if this stock does actually climb back to 1048, 1049, you can guarantee it is going to congest around the VPOC, because that is what happens. That is what you expect to see. It is inevitable. It's very, very unusual that any price can go straight through an area of this heavy congestion, just like a knife through butter. It doesn't happen. What you will see on the low volume nodes, that is where you will see it happen. And that's the beauty of having the VPOC and the histogram itself, because when you approach these areas, it gives you a heads up as to what is likely to happen next from a VPOC histogram perspective. So that's Tesla. But that, you know, that methodology, that approach, that could apply to any stock you care to pull up, and indeed any chart. Doesn't have to be a stock, can be commodity, futures, forex, whatever it is, ETFs, doesn't matter. The methodology applies simultaneously. Let's just go back to just see what the, hold on a minute. Yeah, Anna says there's a question. I shall just answer. Are those levels support and resistance? They're both. They're calculated by the indicator. You can color them as you wish, but obviously, as if they're support and they're breached, then they become resistance, and vice versa. So they are not, the blue and red does not distinguish one from the other. It's just a color differentiation that I use. You know, we use it everywhere, and they are being drawn by the indicator. And as I say, every time a level is tested, then the indicator recalculates and reassesses. And also, what is also important to realize is the accumulation presents these levels within the price action, which is where you want to see it. So it's very much within the price action where, you know, you want to know what's going on, you want to know where these levels are. So they're constantly being recalculated the whole time. Yeah. So 3 means yes, exactly. That's exactly it. Very, very simple. These little numbers up the side here, and in fact, it's available. The accumulation distribution indicator is available on NinjaTrader. We've got it on TradingView, and we have it on TradeStation, which I've got down here somewhere. And it works exactly the same way. In fact, if I pull up TradeStation, probably show you it there as well. Here we go. Have I got it on here somewhere? No. Let's have a look. Have I got it on one of the, yeah, here we go. Just pull up one of these. Oh, sorry, let's just pull that up there. There we go. Exactly the same principle. These little numbers up the side, you can probably see them a bit clearer here, but this level has been tested 6 times to date. And if it's tested again in the near future, then, you know, that will change, and the algorithm is working in the background. It's a complex algorithm, but that's what it's doing the whole time. It is calculating, recalculating. Every time one of these levels is tested and holds, then it will increase it from 6 to 7 or whatever it is. So, you know, that's just the way it works. But as I say, it's on, we've got it on TradeStation. We have it on, I've got TradingView over on the other side on another terminal. I won't pull that over at the moment. So let's just drop that back out the way and go back onto Ninja. Seems like it's managed to push through there. I've got another little level above there. Let's just head over to the indices themselves, see what's going on, broadly speaking. Broadly speaking, it's been an update for, this is the three sisters. I've got the YM, December contracts. This is YM at the top left, NQ in the middle, and the ES S&P 500 on the right-hand side. So this is NASDAQ. So basically it's down NASDAQ and S&P 500. In terms of what's been going on, just pull these up full size, make it a bit easier. This is the price action I was referring to. This is the Dow, and this is the price action I was referring to. This curving effect, which is not particularly a sign of great strength. It's this arching over. And when it's associated with not only narrowing spreads, but also volume that's trying to push it higher, and that volume's really not going anywhere. You can see yesterday we've got this tiny little candle at the top here on the Dow with a lot of volume going in there. In other words, effort and result. In other words, if effort and result, Wyckoff's third law, was in agreement, this candle at the top should be somewhere in the size of, if you look at something similar, what have we got? I don't know. Something, where are we? Something like this, for example, maybe not quite that much, maybe a bit less than that. But that's what we should see if price and volume are in agreement. Clearly, they're in disagreement because you've had a huge amount of effort gone in down here, but has actually resulted in no forward motion. The analogy I always use is, and it's a very simple analogy, it's not perfect, is of imagine driving a car up a steep, icy mountain road in the middle of winter, and the road is getting steeper. You are applying more pressure to the gas, to the accelerator, and you are slowing down, and you will get to a point where you are applying full pressure, but you're not actually moving. In fact, the wheels are spinning and you're not moving forwards. In fact, at some point, you'll start moving backwards and sliding back down the hill because you've got no grip. And that's essentially what is happening here. You've got a massive amount of effort going in, but the price action is not moving forward. So what does that tell you? It tells you this is heavy selling into a market that is not accepting buyers. In other words, it's not receptive to a move higher. The sellers are in here. Every time the market tries to rally, the sellers hit it. It rallies, the sellers hit it. It rallies, the sellers hit it. That's what's going on. So this is the market makers selling into weakness, selling into weakness. And that's a very simple example of what you look at all the time. You're looking for this analogy of cause and effect, of effort and result. Are things in agreement or are they in disagreement? Now, what we've got going on at the moment is we've got all three of them in agreement, whereas this is down, that was up, the NQ and the ES was kind of, well, razor blade, really. Similar sort of price action to the Dow here. We had effort, a lot of effort going in, really going nowhere, trying to rally. It was up earlier on. Sorry, just kill that off. It was up earlier on. Let's close that down. It was up earlier on, but now it's it's down a little bit. And now we're starting to see a nice price waterfall develop, and we've got all three. And when you're trading on one index rather, it's great to have all three up. I mean, what we're seeing here is confirmation across the timeframes of the sentiment that is taking hold right now. Once again, we've got levels in here. We have a very strong level here. This is the VPOC. I've actually got it in purple here for some reason. Don't know quite why. Coming down some low volume area here. The trend monitor's transitioned through to red. The volume here is distorted because this is the open. This is 2:30 our time. So this is when certainly until next week our clocks go back on Saturday night, Sunday morning. So this will change. But at 2:30, that's when the US market's generally open for us. If I slide that out the way, you'll see that the volume is not quite so tiny as it was. It's still significant. We've got this nice move going. Looks nice, very nice move. And that's been confirmed across all three. So if we go on up to the multiples, go across the multiple window, which is over here. I think I've got the NQ. There we go. Really nice move. Nice price waterfall developing. Really nice tradable move. Trend on. This is. Sorry. No, this is on. This is the NQ. I've got six time frames on the NQ. 15 second, 1 minute, 3 minute, 5 minute, 10 minute, and 15 minutes. So real intraday stuff. And the key thing to watch here is if you're trading this, you know, as I said earlier, the significant is going to be the slower time frame is going to trump your faster time frame. So if you're on 15 second, you're trading that, you're thinking, great, lovely, you know, I'm making money here, all nice and dandy. We've got rising volume, excellent stuff. Bear in mind over here, you've got a volatility trigger, which is a bit worrying. You've got a VPOC appearing here. So you're looking for possible congestion to build around that region now, because this is a 3 minute time frame. And that's high volume under that volatility trigger. So you're looking for congestions to start building. So if you're hoping for this to slide lower, I would close out, I'd be sitting and waiting now, waiting for the next phase of price action to take hold. Because of this over here, we've got nothing down on 5, I don't think, which is coming into play right now. But if we're going to go all the way back down to 620 from 640, then sure as eggs are eggs, then this volume point of control is going to be mighty important, because that's where the market will pause in terms of that particular time frame. It broke through this level here, which is very strong. It also broke through this level here also, which was strong. If the candle closes off below that, which it looks as though it might do, then that is going to act as a strong resistance in any recovery or reversal. Down onto the 10 minute. Coming straight down onto a volume point of control here on 10 minute, that is going to trump all of those charts before it. So the 10 minute is more important than the 5 minute, more important than the 3 minute. So plus in addition, we've got some price-based support there as well coming into play. So 35 is probably the mark that you would expect to see. The trend monitor, you can see it's just starting transition now. 35 is probably the mark at which you would look for an out, depending on what you were doing. There we go, and down onto 15. Okay, and we've got a volume point of control down at 610 if we get that far. But certainly the 10-minute one is going to be important. It's really falling fast now. Lovely stuff. This is the sort of, you know, this is where you make money really quick. You just got to get in, load up, move quickly. Multiple contracts, you've got to decide whether you're scaling in or scaling out. If you're scaling in, fine. If you're scaling out, fine. You know, the pros and cons of both approach. There is no right or wrong way to trade. You've got to find what works for you. Scaling in is based on the premise of something actually happening. You're basing it on a price move that's already taken place. In other words, you're basing it on fact. Whereas scaling out is based on, I wouldn't say hope, but it's based on expectation. In other words, you haven't got any facts to back up the fact that you're going in with multiple contracts. Whereas when you're scaling in, you are, because you have something that's tangible that's happened, and you're basing your next decision to load up and add further contracts based on what has already gone before. Very different approach. It's nuanced, it's very different. Some people do it one way, others do it out, and some people, you know, just don't like doing it at all. Okay, what's significant now is if I just pull this out, we've got a volatility trigger, hugely significant. This is on the 5-minute time frame, massively significant signal. If I saw that now and I was short, I'd be out, end of. If I had multiple contracts, I might let one run, but generally speaking, as I said so many times before, I'd be out by now. That's it, I'm done. Because this has major significance. It's a 5-minute time frame, ton of volume coming in under it. What does that tell you? It tells you the big operators are in there. This is going to either congest or reverse, one or the other. And in addition to that, it's down at the volume point of control. So I'm out, done and dusted, that's it. Now, if the market carries on lower, I don't mind, because all I've lost is, you know, maybe a few points around here somewhere. If it crashes lower, fine, I'll jump back in again. What have you lost? Nothing. Do I want to sit through this potential congestion up here? No, of course not. And worse still, do I want to be stopped out? Absolutely not. You've got rising volume here, so this is really confirming the move there. That was nice. And then we're coming down to the volume point of control on 15, which is hugely significant, as I mentioned before. That's why the market has paused, and that's how to intraday trade. Now, this could be a stock. This happens to be an index. I've talked very quickly. But that's the speed your thought process have to go through if you're an intraday trader. I love the 15-second chart. I use this a lot myself because it just gives me instant heads up. What I would suggest to you is that I'm not suggesting you use the 15-second chart for trading. And by the way, look at the speed it went through that low volume area there. This is what you're looking for. You're looking for these low volume regions where the market's going to go through there very quickly, and you're lining it up with these price-based levels as well of support and resistance based off the accumulation distribution indicator. But what I would urge you to do, if you're not familiar with VPA, use a fast time frame chart, not for trading, but for improving your knowledge and speed of just seeing things happen. It's all very well doing it on an hourly chart. It's quite tedious. I mean, when we started, we used to print off charts for one another and just cover them up and just read them in that way, line by line or bar by bar. Nowadays, you've got all these free platforms. Most platforms have seconds charts on them, not all. I'm not sure MT5 does actually. I think it might do. Can't remember now off the top of my head, but certainly, Ninja, you've got seconds charts on TradeStation, TradingView, all these great platforms. So, use it in that way. Okay, now if this is not going to hold here, would I jump back in again? I would certainly still be cautious because you've got a VPOC here and you've got a VPOC here and you've got a VPOC here. So you've got 3 VPOCs on much slower timeframes on the 5, 10, and 15 at the bottom, as opposed to the 15, 1, and 3. Now, another great way to trade that move is on multiple Renkos, which I've got here. I know it says YM, but I think I've got the NQ on it. There we go. Okay, this is trading that move on multiple Renkos. And what this workspace is about is really blending time-based charts with non-time-based charts. Now, the beauty of a non-time-based chart, like a Renko here or a tick chart, is that it reveals raw momentum. You never see momentum on a time chart because a time chart is tied to time. A 15-second candle here is a 15-second candle. At the end of 15 seconds, it goes on to the next one and the next one and the next one. That's it. It doesn't do anything else. But on a non-time-based chart like this, which is a Renko, these bars will form when the market is moving fast, much more quickly. When the market is moving slow, they will build more slowly because they are independent of time. Now, what I've actually done here, I've created 3 Renkos. It's very unusual. It's very powerful. A lot of our customers use it. You set them up aligned with the time charts below, because then you've got the power of volume price analysis on the time chart below, coupled with the power of trading a non-time based chart above. So I've got this on 15 seconds, just click on that, see what it comes up with. The Renko optimizer, which is this indicator, will deliver the optimal setting for your instrument, irrespective whether it's gold, it'll be in dollars per ounce. If oil, it's in dollars per barrel. Here we're talking about index points, ticks. It's telling me it's 19, so I should click on there. Okay, and there we are, it's delivering me 19. What does that 19 mean? Basically, it is, you divide that by 4 because we're on NQ here, so we're on 4 ticks a point. If we're on YM, it would deliver index points, so it would be on maybe 5 points or 10 points, whatever it may be. So each of these here is basically worth almost 5 points on the NASDAQ 100, a ton of money, I can tell you. This is on 30 seconds. Let's just reset. This one's currently on 14, may have changed a little bit. Let's change that up. See what that comes in at. Okay, there, yeah, it's settling down at 24. It's nice and easy, so that's 6 points on there. There we go. So each of those bricks is worth 6 points. And then on to the 1 minute time frame, just set that one up. You can see I've got the accumulation distribution on the indicator on here, works exactly the same way, gives you these really strong levels. You can see the numbers more clearly here as well. And where are we? 31. Okay, so that's just over 6.25 points. There we go. 6.25 points on each of those. There we go. It's very powerful. You've got the trend monitor here at the bottom, which is confirming the bearish sentiment right now. I've also got the trend dots on here. Now, the trend dots and the trend monitor work in tandem. They are perfect combination for this particular approach because the trend dots work close to the price action. The trend monitor takes a more considered view of price action. And what you will see with the trend dots is you will see them moving when there is a congestion, they will change color. And when there is a reversal, they will move to the underside in this case, because we're coming from the upside, or we're coming down and we're going to start climbing. And they will move to the underside. Now, the trend monitor has not changed yet, and it will not change for a little while because it takes a more considered view. You can see here we're starting to get blue coming in here. We had some gray, we're starting to get blue. It takes a more considered view of changes in trend. In other words, it's a slower looking indicator. It will take a more considered view of what is going on. And once this starts to change, then you will start to see this transition through to, could be a darker red, could go to darker blue. Occasionally it goes from bright red to bright blue in a dramatic color change when the price action really does change very swiftly. But generally speaking, you will see this start to shift through the color sequence of a bright red to dark red to dark blue into bright blue. Not always in that sequence. Sometimes it misses one out. It might go from bright red to dark blue and into bright blue. But essentially what you're seeing now is you're starting to see the trend dots develop underneath, change color. You're also starting to see the price action come up and hit this level here, which is a strong price level, very strong price level on the support and resistance indicator, which is coming into play as I speak, as it is over here on the 30-second time frame, and you've got it again over here on the 1-minute time frame. But it's just a fantastically powerful way to use multiple time frames, but multiple time frames with non-time frame based charts, of which the Renko is supreme in our view. Got a little pivot formed here. That little pivot is a little pivot to notify you if you've got a potential change in the price action. In other words, an intraday change in sentiment from bullish to bearish. It's not a get in, get out signal. You know, it doesn't work like that, but it's just giving you another little piece of the jigsaw to help you in your trading decisions and trading armory. Let's just go back to just something else I wanted to show you. This is on, where are we? Soft commodities. There we go. You may not trade softs, but this is on soybean. I've got the soybean contract here, top left. This is corn, and I've got wheat over on the right-hand side. And I just wanted to show you soybean because, again, it's another example. This is when the soybean market's underway. Really nice, strong move early on in the session. No particular strong price levels at that point. We went through, you know, some reasonably low volume here in a nice low volume area here, low volume area breaking higher. That was all fine, and we got up to the volume point of control. The candle I want to show you is this one. Ton of volume coming in, absolute huge amount of volume coming in, and a volatility trigger. You know, what is that telling you? It's telling you that, first of all, through the prism of the volatility indicator, which is it's such a simple indicator, but boy, it's so powerful. It gets you out of so much trouble. And the beauty of it is it actually triggers in real time. Now, if you're on a 1-minute chart, you could say, well, okay, it's not that important. But if you're on a 5-minute chart, boy, oh boy, it is important. It's hugely important, because what you will see is the price action, the trigger for the indicator is when price action moves outside the average true range. In other words, the average, if you will, you know, the expected. And what you've got to remember about volatility is all that's happened here is that this price move from, I don't know, 1258 up to 1266, whatever it was, normally that would take place over, you know, this sort of range. You would expect 4 candles to deliver that sort of price spread, or 5 candles even. And all volatility is a compression of time, nothing else. That's all it is. But what the power of volatility is that it is driven by the market makers and operators, and it drives one emotional fear, and that is the fear of missing out. Because I can absolutely guarantee you, without fear of anything, that at this point, when this market was rushing up, traders who'd missed out on this lot, the Johnny come latelys, would have been jumping in here quite happily thinking, oh, terrific, we're going to make some easy money here. Always wrong. They're always wrong, because this is telling you loud and clear, as soon as you get this volatility trigger, as I said before, close out or if you're in here and you got in early, fine. Don't jump in here because you're going to get absolutely taken to the cleaners every single time. And all it's looking at is the average true range is a compression of time into one candle. So this would normally take place over 5 or 6 candles. It's compressed into time. The market makers, the big operators, have racked the price up here really fast, rammed it high. They know exactly what's going to happen. All the traders are going to jump in here thinking it's nice, easy money, fear of missing out. Bang. What have we got? Congestion. We've got a full-blown reversal in this case. It doesn't always reverse, but 9 times out of 10, you'll be sitting in congestion, and congestion is extremely painful. You don't want to sit through congestion. So I just wanted to show you that on soybean. I'm not sure if we had the same on similar sort of price action here. And again, the nice thing with trading any of these soft commodities, I'm not saying they all follow one another, but generally speaking, because they are obviously they're soft commodities and you will have all the geographics and everything else, they will tend to follow one another, and although not always. Let's just see what's happening on, just very quickly, oil, another one we trade a lot, another one we analyze a lot. Coming up to $85 a barrel. We did a post the other day. You can see the weakness coming in here. Candle here, wick to the upper body, narrow spread, lots of volume coming in here. You know, there is some support, but there is weakness now coming in. But we're still bullish on oil longer term. Still probably going up to $90 a barrel in the longer term. So have a quick look on gold. Gold's interesting. Poor old gold. Here we are. This is another one that you know, if we do analysis on gold and say it's going down, we get absolutely flayed alive on Twitter and all the rest of it because the gold bugs. And I understand it. I do. I mean, at heart, I'll be honest. I guess I am a gold bug. You know, to me, it's a precious metal, and it's nice to see it going higher. But from a trading perspective, I couldn't care less what it does. But gold bugs are fanatical, as indeed there are, you know, fanatics in many markets, and Tesla is one, and I guess cryptos are another. But you know, that's unfortunately, yeah, it will go down. Of course it will. It's not always going to go up, but at the moment, you know, we're bullish on gold, have been for a while. But what's interesting about gold right now, let me just move this is time and sales, by the way. It's time and sales window over here. These are the contracts going through. I'm not interested in all these 1s and 2s down here. I'm looking for big blocks. I won't go through that now. But what's interesting about the daily chart for gold is really this whole area. There are 2 key levels, and we've written about it. Anna's done multiple analysis on her site. This level here is absolutely key, 1840. If gold gets through 1840, it will carry on to 1900 and probably beyond there. But at the moment, it is absolutely struggling. And the region it's struggling at, we've got the volume point of control here. Just pull this back a bit, see a bit clearer. We've got the volume point of control underneath here. We've got this yellow dash line, which is the center. In other words, we're back at price agreement. We've got this immensely strong red dash line above of the accumulation distribution indicator, which is it's capping the price advances all the time. It's just sitting on them the whole time. It really is it's almost impenetrable at the moment, but that is absolutely key. Now, if the metal manages to break above that and hold above it and start to claw it through, and then what it's got to do, it's got to get through all this volume that sits all the way up until we get to about 1830. So all this volume in this region here has got to be breached. So, you know, from 1800 to let's say 1830 is absolutely critical. What we want to see is some nice price action, good volume supporting it, lots of you know, supportive price action on the daily time frame, and then when we get to this key level here, that will be absolutely key as to what's going to happen longer term. But it's all back to VPA again, and in exactly the same way. It doesn't matter whether you're looking at a 1-minute chart or a daily chart as there. It's all the same methodology and the same application of levels and flow, support and resistance from a volume-based perspective, from a price-based perspective, using the indicators, using multiple timeframes, using non-time-based charts, using time-based charts, etc., etc., etc. Let's just go back finally onto the multiples for where we were before. There we go. Let's see what's going on there. Okay. What did I say at the time? I said, look, you know, the VPOC here is really important. I'm expecting it to congest. I'm not expecting it to, to rush through here. It hasn't. It's congesting. We've got levels building above. This is struggling a bit now. You can see the volume's falling away, trying to rally on falling volume. Not looking terribly strong, but nevertheless, it's in congestion. It's what you expect to see. It's in congestion here. Why? Because we had a volatility trigger. We got a VPOC. We're trading in the spread of the candle. It's what it's all about. Trading is about having the confidence and having the ability to read either through volume, through support and resistance, through your indicators, to have a good sense of what you think is likely to happen next and to base your trading accordingly. You're not always going to be right. Of course we're not. We never are. You have to accept losses. It's part and parcel. But the difference is that when you get into a trade, it's maintaining a position to actually maximize what you can from that position. As I was showing you earlier in that price waterfall, we got down to those levels where I said, look, this is going to pause, this is going to halt, get out. You've taken a decent slug of profit, fine. Because that slug of profit will overlay all those little small losses that inevitably you will take. Because if your trading account has got multiple small losses, but you've got some nice chunky big wins in there, you'll have fewer of them. In a 10 trade, to take a 10 trade ratio, you might have 7 small losses, but 3 winners. Your 7 small losses might be 10 points each, let's say 70 points, but your 3 winners are 30 points each. So it outweighs, so your account moves forward, and that's the way it should be. So you can move forward with an account, even having 8 losers out of 10, as long as the losers are small and the 2 winners are big. It's not a 50-50 game anymore. That's the way that the cards fall. 6, 7 to 10, 8 to 10 even. That's what you're looking at the whole time. But those winners, you've got to sit in those winners, and that's why the trend monitor is so important. Using it in multiple time frames, using all the indicators in that way that I've just gone through. Gone way over time. Apologies for that. Yeah, the name of the kit is Accumulation Distribution. It's yeah, we call it the ACD indicator for brevity, but you will find it on, as I say, on the three platforms. It's on TradeStation, it's on NinjaTrader, and it is on TradingView as well. Unfortunately, we can't develop it on MT45 because we haven't got the functionality within the code. It's not that we don't want to, it's just we don't have the functionality there to do it. I'm going to stop there. Just very quickly show you where all the sites are. This is Quantum Trading. This is where you'll find all the indicators. That's the platforms that we have at the moment. Just to give you a heads up, the one we've done a lot of work on TradeStation. A lot of work on TradingView recently. We've got the radar panel and everything else in there, and the Bitcoin cryptocurrency currency strength indicator there as well. We are now working very heavily on NinjaTrader, and what we're working on is the market analyzer, so that if you have the indicators, you will be able to use them in market analyzer. Because one of the things that, in fact, very quickly, let me just show you this on, Anna mentioned it earlier on. Trading Forex is straightforward in the sense that, generally speaking, you're dealing with 28 instruments, 28 pairs. And that's more or less it. I mean, yes, there are thousands of currencies, but generally speaking, we deal with the 28 inverted commas majors currency pairs. And the issue with stocks is, as Anna showed you on FinViz, is actually sorting and coming up with a quick way of how to sort. This is on TradeStation. I just want to show you this very, very quickly. If I click on that, go into data, this is a very quick scan, a very simple scan. Just on a size, price, and what have you. But actually what I've got on here is RSI. I've said the RSI has got to be greater than 50. So, it pulls up all these, and in fact, I can run the scan again. Just run the scan. There we go, you see how quickly it does it. So this is running a scan. This is running, if you top right here, you can see we're running a scan on 11,300, and that really puts into context. This is what you're dealing with. So you're constantly trying to find ways, and you also have criteria that you want to settle on for trying to identify stocks which are going to be of interest to you, either from an intraday basis or as an investment basis. Okay, so that's delivered that lot back. So we know that anything that we click on here will have, if you see down here, I've got these all symbol linked as well. This is symbol linked. You can do this on Ninja as well. So these are symbol linked down here, symbol linked to this one. So you can go through however many there are here, hundreds of them. You can go through these very quickly, but each one of them with a simplified criteria we know will have an RSI which is greater than 50. This one's got whatever it is, 64. This one's got 63. So, and obviously that is just one simple filter. You put a lot more filters in there, so you'd actually end up with a manageable list. But I just wanted to show you it because it's a quick way of many of the platforms, and that's one of the reasons that we are developing the market analyzer to be a lot more powerful. And we're also looking at new indicators on NinjaTrader as well. So the indicators will work in Ninja in the market analyzer, and you'll be able to use them in that way in terms of filtering, certainly on the indicators. And also we're looking at other ways of using the market analyzer in terms of analyzing stocks for sorting and filtering as well. So that's where we're putting a lot of effort at the moment in terms of NinjaTrader. As always, if you've bought one indicator from us, you will always get a credit. If you want to upgrade to another package or platform, if you want to upgrade to, let's say you bought one, you want to upgrade to a package, or you want to upgrade to full, we will always give you a credit for what you've purchased from us in the past. Moving from platform to platform is very straightforward. We don't charge. I think it's outrageous companies that do. I know several that do, and I think there are, well, I'm sure you can imagine what I was going to call them, but there we go. We don't. If you want to transfer from one platform to another, we just make it happen. There is no cost involved. The only cost will come if, for example, you're upgrading to a package that has more indicators and is therefore more expensive. So, for example, if you went from MT45 to TradeStation, TradeStation has a lot more indicators. It's also got radar screen in there as well. So you would just pay the difference between the full package price, but we don't charge you for the privilege of actually moving. So if you've got a currency strength indicator on MT45 and you want to go off to TradeStation with it, that's fine. It doesn't cost you anything. We just enable it for you and disable the MT45 one for you. So it's very simple. There's 24/7 support. We are literally here 365 days of the year, I can assure you, even on high days and holidays. And you do not pay anything for any upgrades. We do all the upgrades, any upgrades to platforms, any upgrades to indicators. It's all included in the one-off price, and you can pay on the EPP as well. We don't charge for that either, where we split the payment into 3. So that's what we're doing on indicators. As I say, very heavily involved in NinjaTrader, and we're also, as Anna said, we are just now planning out our options trading program, which will be bolted onto the Forex trading program, which is here over at quantumtradingeducation.com. So that'll be set alongside that. Hugely popular, and we've also got the funded program there as well, where you trade our money at no risk to yourself. And we've got a lot of students on that too. I also have to say, we have a lot of stock traders who've joined the Complete Forex Trading Program because they are now starting to realize that Forex sits at the heart of the market. Forex is the hub around which everything else rotates. And the reason it does that is very simple, because it's the cash. If you're transferring assets from a risk asset to a safe haven asset, how are you going to do it? Well, you've got to sell something to buy something else. So it all goes through the Forex world. And gradually the stock trading community is starting to appreciate that. And we have a lot of stock traders who are now completing the program because they understand the importance of relational analysis. Finally, on Anna's site, this is annacouling.com. This is where you'll find all the books. They're all up on Amazon in Kindle and in paperback too. And this is where you'll see the analysis. I think that one up this morning, actually. That was on copper. Alaska it's ALK. That's falling nicely. That's another support level that was breached and really gave a nice signal for a sell on that particular stock. So there we go, that's it, I'm done. Thank you very much indeed for coming along today. Hope you've enjoyed it. We will be, we're back tomorrow morning, early doors, I think, from memory. I think we're 7, don't quote me, 7:30 maybe UK time, pretty early anyway. So we will be back tomorrow morning for the Forex session. Thank you very much for coming along today. Hope you enjoyed it. Enjoy the rest of the trading session. And if you're not coming along to the Forex session tomorrow, have a great trading week. Think or swim. Yeah, funny you mentioned that, Edwin. It is certainly something we are looking at and will investigate. We would love to do something for Think or Swim. So if we can, we will. It's certainly on our radar, I can assure you, as is multi-charts, because multi-charts comes out of TradeStation on the same coding platform. So yeah, we are looking at Think or Swim for sure as well. So thanks very much indeed. See you soon. Enjoy the rest of the day and the week. Stay safe and see you soon, and bye for now.